So as we go into this new calendar year 2025, I just want to talk to you about adopting and as we set off and we start doing this, I want to wish you the very best on this journey onwards from January to December, right? The calendars have changed. The markets are still the same. The Nifty, the Bank Nifty, with all those changes, which have come through from October, November, December, posing an additional challenge for us. We've been working out on these processes and these methods of trading, and as we head into a new calendar year 2025, this is something which is giving us a lot of excitement, because in the past 2 or 3 months we've been witness to some super clear signals. The markets you can see have reduced volumes, but the volumes which have been left are super clear volumes, and they've been giving us very clean, definite signals to trade, and that is what is exciting for us as we move into the coming year, right? So let's have a quick look at charts, and then we'll talk a bit about what is the proper process to trade in these markets. I have a Nifty futures chart on screen, and no doubt some of you today we're just going to train our focus on understanding one element of that chart, which is the IB and IS signals. And the easier way to do it for a number of traders is to focus on that. Just let me explain to you that whenever these bars show up, they tell you that there is a change happening in the market. Some people who have come in and pushed in aggressive market orders, like all these greens over here, large sizes, and this bar has to be treated very differently from the other bars in the market. If I'm just focused on the role of these IB bars, if I'm just focused on these bars where these IB bars have come, I'm opening myself up to a lot more possible, probable, good trading opportunities in the market. So what we have to do is as we head into a new calendar year, the first message which I give to the team which is trading with me is not to understand that there is only one way in the markets. There are actually 3 ways to trade a market: the up, the down, and the sideways. And the more open you are to these 3 possibilities of trading a market, the better will be your results in the market, because you're opening yourself to a lot more opportunities. Now, what we advise is be open to the movement of the market, be a follower of the market, be a person who knows and understands where the bias of the market is, where is the dominant trade in the market, and trade alongside it, right? So today what we're going to do is we're going to try to understand the market in terms of where the signaling is via order flow.
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Can we get a confirmation on the sound, guys? Great, thank you. So let's start with the review of what has happened last week, and we'll do that weekly review on spot, and then we'll move on to the future chart and have a look at the order flow also. So what we had done in the week prior to last week in Nifty spot was made a double outs. 13th of Jan to 17th of Jan, when we made this narrow range neutral center profile, we followed it up with another neutral center profile. We followed it up with another neutral center profile, which was a outside bar. And what we did last week was formed a neutral extreme profile to the upside with value and range both overlapping the last 2 weeks. So how did we start last week and what was the structure telling us last week? So the weekly profile of last week is a double distribution profile, but this is not a ideal double distribution profile. But because what happened was we opened lower on Monday. I will switch it to the daily chart in a while. Before that, let's just have a check of what we have done on the weekly. Then we'll split it on to the daily and see what happened on the day wise. So we opened lower, but we could not extend. We left a very small buying tail, and then we gapped higher the next day. And in this gap higher, we left an important failed auction on the daily time frame, and then moved on to probe higher. But after the first half of the week, which probed higher, because on Tuesday we formed neutral extreme and then opened higher on Wednesday, we got stuck into this selling singles from 6th of January to 10th of January. So after that, we started to form a balance. So the weekly profile is a double distribution with a very small lower distribution, and we had a very tiny buying tail, the DD zone, which we call, which was from 23369 to 23434, and then we had a larger 4-day composite, which was the upper distribution of the DD profile. So when the DD is not matched, in the sense that both the distributions are not equal, there is a very good chance that the DD may get filled. So that is what we were expecting. This POC, as always, we maintain the POC of the weekly chart will be the reference for the open. So below the POC, we would be bearish. Above the POC, we would be bullish. So below this POC, we would have been looking for a fill up of this DD zone. So if I split this into the daily chart and just do a quick review of last week, you can see how this gap down open on Monday, there was a fresh selling because we did not extend the initial balance. And then we went on to form a nice Gaussian curve. So when a gap down is showing you a balance, that is an indication that the direction in that the directional move in that of that party may be taking a pause. And what happened the next day in the gap up higher, we went back above this weekly POC, but then we made that seaside extension which gave us a failed auction. And that failed auction came at an important reference of 2342423, which was just near the rollover point of February. So we went on to tag the 180R target, which was at 23652, and then we are looking uh, to probe further ahead. And in the higher open on Wednesday, what we did was we got into this weekly selling tail. You can see how we had an extension handle at this 23911 in January. And if you can recall, 23915 was the rollover point for this series. So you can see how every time we are following certain levels using the market profile and the order flow, we get definite cues of what the auction is doing, of which of the supply or demand is taking control. So at this place 23911, we when we left a selling extension handle, it was very clear that the sellers were coming in aggressively. After which we went on to make those new lows, and now here in the last week, once we got this up move, and the failed auction is a failed auction is a setup which is telling you one of the party failed. So there is no initiative activity in that party. It is actually because one party has failed, the other party has taken advantage. So after the failed auction, we needed to get some initiative buying for us to probe higher and test this extension handle. But what we did instead was on Wednesday, we left a very small selling tail. Just like how this important buying tail on Monday was telling us that there is no supply here and the buyers are getting a bit of a hold in the auction. This selling tail on 5th of February, which was coming right in the selling zone of January first week, was telling us that now the upside is getting capped and the sellers are coming back. So after this narrow range profile, we made this uh, definite move away on Thursday. We got this big initiative selling tail, which was very clearly telling us that this POC is getting rejected and the sellers are wanting to take it down. So obviously, when we already have spoken many times about the concept of the failed auction. We know whenever a failed auction is formed and it has hit the objective in T plus five within T plus 5 days, it tends to get revisited. So that is what was the objective then once we got this selling tail. So what happened later was we formed this long liquidation B-shaped profile on Thursday, but this initiative selling tail was telling us that the sellers are now in control. We held just above this VPOC on Thursday, but on Friday we broke that and we made this dreaded seaside extension which gave us a bounce, but the bounce got stalled in this attempt. You can see how E and F made marginal range extensions higher, but they were getting rejected, and they were getting rejected right at this in this selling tail and below this spike of Wednesday. So that was telling us that the sellers are now definitely holding the auction, and this rejection gave us another failed auction at 23694. So this failed auction was telling us failure by the sellers, which is why we got this up move structure wise. And then we got two back-to-back initiative selling tails. And when the buyers made one attempt on Friday, they failed. So this was adding to the already bearish setup. So this was very clearly telling that now the PLR is to the downside. And even though after making this lows, we got a bounce into the close at 23560. Overall, the structure had changed, and we were looking for a revisit to this failed auction and a test of this VPOC of 23276. And this failed auction, which came at 23694, the 180R was at 23451, which is exactly where we made the low. And from that objective, we got this bounce back to the POC of the day. So this is what we had done last week. The value was overlapping to higher. So the POC, which was at 23573, was the reference, opening reference. But what did we do today? We opened below that POC and we have left another initiative selling tail. So you can see how the initiative selling tail went on to take off this failed auction, and then we got into this value of Monday. So we were not able to tag this POC as of today, but certainly the profile which we have left today is a bearish one. It has formed lower value and it has left an initiative selling tail, and we have closed below this FA point. So this FA is now showing us change of polarity, and we also have one more FA which is caused by the failure of the buyers. So considering all these factors along with today's selling tail, we are all set to test this POC, and then we can even probe below previous week's low in tomorrow's session mostly. On the upside, if this bearish view will get negated only if we start getting accepted in this week's initiative selling tail and we get back above the weekly POC of 23573. So this is how we are placed in the Nifty spot. For now, for now very clearly we saw how last week started with a up move, and that up move was fueled by this failed auction, and we hit an important selling supply zone where we got reconfirmation that the sellers are still holding because of this first selling tail and then this second selling tail. And then when the buyers tried to make a comeback on Friday, they failed in this range extension, so giving us another failed auction and the 180R target. So today again we have seen initiative selling right at the start of the week. So as long as this AP rate singles is holding, we are looking for a probe lower. And the 280R target comes to 23207. So if we break this tomorrow, we are likely to probe below previous week's low and go for that 23207 tag. So that is as far as the Nifty spot is concerned. Now let us have a look at the Bank Nifty spot. So Bank Nifty was slightly more bullish than Nifty last week. and we'll see why that was the case. Because Bank Nifty opened lower. We had a 500-point gap down on Monday, but we left an initiative A period buying tail. In Nifty, we saw that happen in the B period. And after that A period buying tail, we also had some news because of which the Bank Nifty opened higher the next day. So because of which we got this back-to-back A period buying tail. So I'll just split this weekly into the daily profiles. The weekly POC. So it was a bullish close, which was followed by a gap up and another initiative buying tail. And what we did in the process was we got above the previous week's value. And then we went on to leave the third initiative buying tail of the week on 5th. But here again, what you can see how this high was getting stalled in this supply point of the same weekly profile which we saw in Nifty spot. So another interesting point I'll show you. I'll just unmerge this weekly profile also, so that we can have a look at how making note of those references are very important, and it helps us to gauge especially on important event days like the RBI policy of what the auction is trying to tell relative to previous supply or demand zones. So what we did after these initiative back to hat trick of three buying tails is we got a initiative selling tail. And this selling tail formed a B-shape kind of a profile, but it was more a two-sided profile which we had formed. So we could have merged the profiles of Tuesday and Wednesday, Wednesday and Thursday, to get this 2-day composite. And then our reference would be the 2-day value for the RBI day. On the RBI day, what we did was we made an open auction in range. In the B period, we made this swipe higher. Just when the rate cut was announced, I think this swipe came in. No, this was before the rate cut was announced. This swipe came in, and we already made this responsive selling tail. It also, although it came in the initial balance phase, so on the daily structure, it will be a initiative selling tail still. But this came after the A period got over, and what we did uh, in the C period was make the typical C side lower and a bounce back higher in the E period, which stalled right at this B TPO. So this B period TPO, you can see the reference of B period TPO. The high was getting rejected right at this C side reference of 6th of January, which was a sell side profile. So the 6th of January was showing us sellers, and this RBI event gave us a selling tail in the initial balance right at that reference. So it was very clear that the supply was coming back. It was waiting for the event to get over, and as the day ended, this scale held. So it was very clear that the Bank Nifty is looking for more downside. So the weekly profile was once again a double distribution to the upside in Bank Nifty also, very clearly telling us that the supply is so I'll just revise it to the weekly, and then we'll see what has happened today in context with the weekly. So you can see how we have opened well below the weekly VPOC of 5383, which was a bearish sign. And what we have done is we have left an A period buying tail, and we have formed uh, lower value. But the lower range extensions were not uh, that big. So, and what it is doing, it is stalling right in this DD zone. This DD zone is from 49611 to 49359. That is the DD zone, the double distribution. So what we have done in Nifty, we have already got accepted in the DD zone. So if I show you show you the weekly profile and you buying or selling activity. But if the DD is revisited, the singles are revisited, that means that the buyer is no longer present in the auction. So you can see how Nifty we have formed value in the DD zone. We have negated this GD singles, and that is why this is no longer a valid demand point for now. So in Bank Nifty, what we have done today, we held above this, and we have taken support just above the buying tail of 49611. So below 49611, which is the DD zone, if we get into this, we are looking for a test of this 49359 and this lower distribution POC of 49200. So we have left this initiative selling tail, but what we saw in Bank Nifty, because of the bad job done by the sellers after the initial balance, you can see the seller were not able to close. So we did get a bounce into the close, and the bounce got back to this ATPO's halfback of 50,030. So this singles would be the reference tomorrow. If we get above the highs of today, then we are looking for a test of this 5383. But if this 50,030 is held at the open, and we this is a nice B shape and balance profile. So you can look at the 80% rule happening in this. If we get into this value, we can probe to the lower end, and if we break below this, 49611 would be the lower reference, and then the DD zone can get filled up, just like what has happened in Nifty today. So let's see how it goes. The auction looks to be poised for more downside, but we will need to get confirmation in terms of the open type tomorrow, and then the range extensions after the first hour is done. So now let's have a look at the futures chart. This is the Nifty futures profile chart, and a quick look here, we can see how this gap down last week, we got this buying tail, and then we went on to get a failed auction at this 23496 and probed higher. I'll just, and this probe high, we are in fact, even on the neutral extreme day, we saw the POC shifting to the top. So that itself was an indication that whatever buy upside has come, whatever buying was there, has booked profit. So once we formed this initiative selling tail on Thursday after this Gaussian curve, it was very clear that now you need to look for more downside. And just like how what we did in spot, we have left a failed auction in futures also at this 23793, and we are uh, gone down lower, and we have left another initiative selling tail today. So in the process, what we have done is we have broken below this anchored VWAP from 3rd of Feb, and today we tested this anchored VWAP from 27th of Jan, which was a swing low, and we have formed a B-shaped profile. So this will be the reference for tomorrow. We have closed right at the POC today, 23460. So below the POC, we would be looking for more downside. We have the rollover point stacked here and the anchored VWAP at 23400. So these will be the support zone. Below this, we are looking for a break of this 23360 VPOC, and we can look for a probe downside in Nifty futures. For upside, we will have to first trade about this sustain about this value of today, and then we'll have to take off the selling tail which we have left, and then get about this anchored VWAP of 23647. So this is how we are placed in the futures. Let's have a quick look at the order flow chart of Nifty futures of the entire of last week, and see how the order flow was not giving us any positive bias last week in spite of the uh, up move, because we did not get a single IB30 bar in spite of the market moving up. So let's have a quick review of the 30-minute order flow of last week and see what the order flow showed us today. So this is the opening 30 minutes of last week, where we did see some good reds. We saw zeros on the buy side. We had a gap down open, and we continued to probe lower in the A period. The COT also was red, and we made lower lows in the B. The COT continued to remain red. But what happened after this was, ideally, if the seller is in control, they will push for lower lows in the next TPOs. But the C side got back above VWAP. So that was the first signal that the seller is not doing a good job. So this still it was the C side. So we are little skeptical about C side because it a lot of times it gives us a contra move. But then it continued to remain above VWAP, and then we had this probe below VWAP which was defended, and you can see how this POC of the RB POC was held. So this was telling us that the sellers are not able to do a good job at this zone, and which is why we went on to get back above VWAP, remained above VWAP all day, and scaled above the rollover point. So at no point in time we have got continuously green caught. So even though we got back above VWAP, we got back above the rollover point, we did not get a IB30 on any of the bars. So that was what holding us little skeptical about the up move. Although structure wise, the seller was not doing a good job, and we got back above VWAP, which was explaining the move was headed higher. And what followed was, on Tuesday we got a gap up. In the gap up again, we got some red caught. So this again, the same thing what we saw on Monday on to the downside, the same thing happened to the upside on Tuesday. We could not extend above B, and we made a typical seaside extension. This seaside extension got in some laggard reds stuck, and this gave us a failed auction. And even after this gave us a failed auction. The failed auction means the seller has failed, but still, again in the D you can see we have one LLT of 731, but he is given as an RB signal. So when you're getting LLTs like this 955 and 731, just the LLT will not give us a trade. Along with the LLT in order flow, we need to get a supportive signal. So if you're getting a red LLT, you want to see a IS. If you're getting a green LLT, you want to see an IB. So that gives you all the more confirmation. And if you take into consideration the market structure and you know what the auction is trying to do, then this matching of signals, the LLT plus a matching signal in the order flow, will give you that extra confidence of going in that direction. But here what is happening, you're getting red LLTs, but they're giving you RB bars. And then we got back above VWAP and continued to probe higher. Confirmation of a failed auction gives us a target, and that target was achieved. And you can see how this entire up move on Tuesday was coming on red caught. So when you are getting this in order flow, yes, you have not, there is no case of a short because you have not got a short signal. When will you get a short signal? When you get an IS bar. You did not get a single IS bar, but you have not even got a IB bar also. The caught is not supporting the up move. So what do? You need to wait. You need to wait for your signals to match, overlap. Only then that will be a setup which will have more probability of being a winner. Else you just sit and watch, you be patient, and you wait for the setup to give you a good probability trade. So even after this neutral extreme profile, and you can see how the POC shifted to the top. So this was becoming our reference. If we were ready to go short, if we get an IS signal at this 23785, because the entire up move had come on red caught. You can see the second half, in fact, all of the bars, 30-minute bars are red. So what happened on 5th, we opened slightly higher. This was a rare follow-up to a neutral extreme profile. And in this follow-up, we got some green caught, which was mostly uh, stuck shots who were coming out. And why we can tell that? Because we did not get much demand and no IB signal was again found. So in spite of the shots, some of the shots getting in trouble, the buyer was not able to make their uh, way, and we remained in a balance for most part of the day with forming a prominent POC at this 23830 level. And into the close, you can see how in this K period we got big rows of reds coming in, supply coming in, and we went on to close with a spike down. So even on 5th, most of the caught after the initial green was red, and the volumes were also on the lower side. So what does it tell? When the volumes and the range is decreasing in one particular direction, it is telling us that the trade facilitation is getting poorer. So even though we have not got a clear order flow signal on the 30 minutes, the structure wise, the upside is getting limited because the range is getting contracted and the volumes are shrinking. For more upside, we needed to get more volumes, range extension on the upside, and IB signals. That would given us have given us the confidence to go long, but this was not giving us that confidence. And then what we did was we opened below this POC of 23830. We left this RS and then we formed this first IS30 bar. Although this came on very low volumes compared to what the average volumes are in the A and B periods, but still this was telling us that the sellers are getting a foothold. And what we did on 6th was we made multiple range extensions lower and we hit this 23660 level. So this 23660 was one important reference in the futures chart because this was the neutral extreme VWAP. So that is why this VWAP holding was telling us some demand is holding this auction. You can see on Friday also, which was the RBI policy day, at the open we probed below the previous lows, but we were holding that neutral extreme VWAP. We got an RB signal in the A period, and then when we made this higher high in the B, this was getting stalled right at this initiative selling tail and this IS30 high of 23755. So once you get an IS bar, definitely the high of the IS bar is your reference, and then the POC before the IS bar, which is 23800, was our second reference. And we have already seen how this 23800 was the zone of singles even in spot on the weekly chart, 23800 to 23911. So if you want to be bullish, you want to see some IB signals here. Here again, you can see how we have got 741 green. These are green LLTs which have come at the top, but the order flow signal is giving us an RS. So again, green LLT does not mean you need to go blindly long. You need to see what the signal is. So what why is this green? Why is the green come here? Is he a stuck long, or is he a short who has covered? We cannot say for sure, but looking at what has happened, mostly this is a stop loss of a short who had entered late in the previous session. So because we did not get any follow up, because if this was initiative buying, we would have held this POC and we would have continued to probe higher. So what we did on Friday was we got stalled right at that selling tail, telling us that IS 30 IS bar was still in play. We went on to make this typical seaside. In this seaside, we saw some profit booking by the sellers. So you can see how the cot was green on Friday first half. So this was not because demand was coming back. This was more because the sellers were booking profits. And why we can say that? Because we got an RB bar. RB signal is responsive signal. Responsive activity is always old business. So these are shorts who are covering. This RS also, when we got the greens, were longs, shorts getting their stop loss hit. These were shorts who were booking profits. So because we had seen mainly reds last week, there was not much of initiative activity. But there was a phase where the sellers had failed, because of which we got that bounce. So again, the seaside gave a probe higher. We made this new highs, but you can see how the shorts who were booking profits in this zone were coming back aggressively when we made this range extension higher. You can see the first red caught of Friday was formed when we made these new highs. So this is how you need to know what the order flow and the market profile is showing us. Yes, we have got the signals to initiate trades, but when you don't have the the signals, how do you study the order flow? How do you make out what is happening? So you see where the RBs are, and then when you see where the RS are, you already know 23800 is a supply point. If you are getting an RS with big reds, you're getting red caught on the 30 minutes, you know that the auction is now meeting supply. And the break of VWAP is a signal that the seller will push it lower. And we have always maintained once the VWAP is broken, either on the downside or upside, if the seller or the buyer is in control, he will uh, look f- keep the auction below the VWAP. So in this case, when we broke below VWAP, you can see how we remained below VWAP. We could not get back above the VWAP, and then we went on to make a range extension lower. So as we saw in spot, we did get a small bounce into the close, but overall the structure was weak. IS30 did come, got triggered. We did see some profit booking. We got a bounce back higher, but where the IS30 high was taken out, but this RSPOC was not tagged, and we saw sellers coming back in the order flow at that level. So it was very clear that we are looking for more downside. And this closing move also, you can see how we stalled right at the VWAP. So when you know a day is belongs to a seller, that VWAP, the day of that, the VWAP of that day becomes one important reference. We also had a failed auction confirmed at this point. So this neutral extreme VWAP, we always have spoken about it many times, how it becomes a reference and how this was our reference going into the day today. And today what happened? We opened lower, we got zeros on the buy side. We got 4 zeros on the buy side. We had a clear open drive down. We were below the POC and VWAP of previous session. And as the neutral extreme does not give a follow up, it was not a neutral extreme, it was more a neutral center kind of a day, but we still were below the initial balance low of Friday. So the bias was still to the downside. And when we saw these reds at the open, it was a very clear case of going short. And you can see the volumes were also good, 17,000 contracts, and we remained below VWAP, getting this range extension lower in the B. Although we made a narrow range coiling balance for the next three TPOs, we were always looking for a move lower towards that 23380 reference of the last week's profile. So we remain below VWAP all the time. And here where we got back-to-back RB bars, formed similar lows at 23389. We got one bounce above VWAP, which was again rejected at this 23480 level. Sorry, 23492, which was the POC of the A period. So you can see how you need to, the order flow is very clear in what auction is doing. And it is up to us how we understand the order flow. So whenever we are looking at order flow, we have to look at the bigger picture, not just one or two parts. So along with the, just like how I explained, along with the LLT, we need to look at what the signal of the order flow bar is telling us. And then we need to see it in the context of structure based on market profile, where the signals are coming, where the order flow is showing us rejection and where it is showing us acceptance. So that is the reason an up move on red caught will not sustain, and what takes 3 to 4 sessions to go up can come down in half a day if the caught is not supporting, the 10 bar caught is not supporting the direction. Similarly, on the downside, if we are looking at more downside, we want the caught to go red. We need IS bars, and we need the range extensions happening in the 30-minute TPOs. So that is how it stays. Let us see what we take today. Again, we have left an initiative selling tail. So today's VWAP would be the important reference. And this selling tail of 23533 remains an reference for the rest of the week in Nifty futures for this week's settlement. So we'll need to see how we are reacting here in case we remain below this VWAP and POC of the day. We are looking for a tag of this lower NPOCs of 23388 and 23324. So that is it for today, guys. Hope these sessions are helpful and you are able to gauge what the market is trying to do or what the market is trying to give you as information. But execution wise, we will have to see the latest data, the latest order flow, see what is happening in the latest order flow, and accordingly look to take the trades in that direction. So let us know what you, if you have any suggestions or any feedback regarding these sessions, you can mail us at support@vtrender.com, and you can also send me a direct message on X. My ID is at Uttam Goel. So it is open for queries, and we would be happy to take any feedback or suggestions which you would want us to incorporate in the following sessions. So thank you guys for joining in, and we will have these references updated in the reports as always. So let's have a great trading week ahead, and catch you back again for a 5 p.m. session soon.